Okay, perfect. I think we can probably get started. So, first of all, thank you very much to everyone for joining us today. Obviously, we've got a very exciting topic to go over today. Our much anticipated Best Places to Invest report for 2025. This is the 10th edition of this report. It's come a long way over those 10 years. And our chief economist and SVP of Analytics, Jamie Lane, will be taking us through the report today and kind of how we came to it and giving you some sort of examples as well. A bit of housekeeping before we do get started. First thing is the webinar will be recorded or is being recorded, so we'll be sending this out early next week, so you can watch it back. Any questions you have, please do put them in the Q&A, and we will have some time at the end to go over those questions. And with that, I will hand over to Jamie to take it away.
Awesome. Thank you, Tom, and thanks everyone for joining the presentation today. We've got already a few thousand people on the call, so we're going to dive in. So this is AirDNA's Best Place to Invest in 2025 report. We're going to run quickly through the methodology, walk through what we're seeing in the US today in terms of investment appetite, look at the results, and then I'm going to do a deep dive demo on how to use the AirDNA platform to find your best place to invest. The report is live on the AirDNA website. You can go and access it. Just go into any search engine and press search for AirDNA Best Place to Invest. So digging in, our methodology. We have made some updates to the report in terms of how we're looking at really ranking these markets. The two that are essentially the same is our demand growth and revenue growth metrics. So demand growth essentially reflecting occupancy, so of all the nights that are available, how many were booked, and are we seeing more being booked today, this year, than in the prior year? That's 25% of our methodology. Revenue growth, I think a very important metric around really momentum around a market. Our hosts today and listings today are earning more money this year than they earned last year. As an investor, I don't want to go into a market where everyone's losing less money and competing more with each other for guests. And then investability. This is really the core to our analysis. Really evaluates the strength of current opportunities in a market by looking at gross yield. So essentially a property's annual revenue potential divided by its list price. And this is where we've made the major change. So instead of looking in the past at essentially average home values and average revenue potential, and essentially theoretically what would be the best places to invest, we've sort of flipped that on its head. And we're saying, like, let's look at all the homes out there that we can buy. Let's run our rentalizer calculator, our estimate of what each of those homes would earn as a short-term rental. So going out and finding relevant comps, and then estimating what that property would earn as a short-term rental, and then calculating the gross yield and essentially doing that across all 500,000 homes available for sale in the US today. So that's actually what we went in and did. And I'm going to walk you through a quick example of that, what the data points are, so you really can understand the data that's going behind it as you go in to do your own research. So I've pulled up an example here in Blue Ridge, Georgia, just about an hour and a half outside of Atlanta. And you see here this sort of list of short-term rentals. So not short-term rentals, homes for sale. So starting high level, as we started to filter down what properties were going to be included in our analysis, we started with a filter on for sale properties of homes that were for sale over $100,000 and less than $5 million. So we wanted to get into this range of essentially removing outlier homes, either too low to probably be viable in terms of home value as a short-term rental, or too high that in a home over $5 million, you're probably not going to be renting out as a short-term rental anyway. We also overlay this filter. We work with a company called Zonomics that has zoning maps that has gone through and essentially figured out where new short-term rental investment isn't allowed. You see those on our for sale listings within our app with sort of an STR and a cross through it. So those are areas that are deemed zoned that I could not go in and make a new short-term rental investment. So we've removed those properties out of the analysis. And then what we do is we go in and look at the for sale price of every home. We then go in and project the revenue that we expect for each of those homes to earn. And then we calculate the gross yield. So taking that revenue and divide that by the price. And we do that across all the homes to get our investability score for every market across the country. And so when we think about gross yields, though, and this is sort of a point I want to make in terms of just what we're seeing in terms of the short-term rental investment environment. In the blue line, we look at short-term rental revenues over time, and you see that as represented as an average monthly revenue. We see those really peaked in 2021, now come down and really plateaued. We look at the average monthly premium. So essentially take a home, take the current, at that time, mortgage rate, essentially what would it cost to get a 30-year fixed mortgage, and assuming a 20% down payment, what would that monthly premium be? And then looking at the premium between these two. Because you look back in 2020 and 2021, where short-term rentals were rising, home premiums were still relatively low. Home values hadn't really started increasing yet. Interest rates were still very low. We saw really peak premiums for new short-term rental investment. Then as interest rates rose, home value rose, and short-term rental revenues started to come down, that investability metric really started to pull back. And it reached a low in October of 2023, where the premium between what short-term rentals were earning and what it would cost to buy a new short-term rental investment on average sort of reached a low point. And now as short-term rental revenues have started to increase again, mortgage rates have come down a bit as well, though in recent months they have started to tick back up. We have started to recover some in terms of this investment metric. So it's something that we're watching. We're in no means in a perfect time to invest in short-term rentals, but I think that makes these sorts of analysis all the more important because you've got to dig in. You've got to have patience in terms of your investment and finding what are going to be the best. Well, and when we look at supply growth, so what are investors actually doing? We are seeing a pullback in terms of overall supply growth. Honestly, I see this as an amazing thing as someone that is investing today. The competition is lower if you're going out into buying homes, and we're not seeing bringing on a property in an investment environment where supply growth is 20, 30, 40, 50% in some markets. In some of the better markets, as we'll see, when we look at the list, we are seeing anywhere from 10 to 30% supply growth, but that's not nearly what we're seeing in some of the other areas around the country. And then when we look at the types of markets that people are investing today. So this looks at 2024 year-over-year supply growth. So how many listings in each of these different location types are available as a short-term rental and compare that to 2023. Essentially, we see very low, slow growth in urban, suburban, mountain, lake markets and coastal markets, essentially 5% and below growth. A lot of urban markets around the country are seeing a pullback, actually a year-over-year decline in supply. And we're going to look at some of those. But where we have seen the best opportunity really across the board is some of the small and mid-sized cities around the country. If we look at our 2024 average growth rate for the markets that made our 2024 Best Places to Invest report, they grew over the past year at about 10.5%. And that's really where we see most of the country that I think is really investable today, i.e., you're going to be able to go out and find a home. You're going to be able to generate a return on it that is going to be a cash flowing property. Um, that's sort of the average growth rates we're seeing. And those are the types of markets we want to highlight for you today. Before we get to that, though, I thought this would be fun to show, just starting with the entire world and then digging into the US. And what this shows here, and this is a data point we're pulling off of Airbnb, essentially every review that gets less by a guest. And those guests are an indication of demand of each reservation that gets made. A very high percent of those reservations, the guests are leaving a review, and looking at where reviews are being left and where we've seen the most and the highest, lowest change in reviews, essentially showing us where our guests going today. When we look at the US, we saw 21 million reviews left on Airbnb in 2024, which was up 2.7%. So what does that tell me? One, US is the largest country for Airbnb. That's a lot of demand that's happening on any given day and any given year. But it is some of the slowest growth we've seen across the entire world in terms of large countries generating a lot of demand. So that's in the upper left-hand corner. Essentially a lot of demand, but low growth. You look at low demand, low growth, these are essentially the areas that you really don't want to be in. Essentially, those are areas that have been impacted by war in Gaza. So Israel, Lebanon, Jordan, Turkey. And you go to the right, top right quadrant, you get high demand, high growth. These are areas with relatively high demand and are seeing pretty strong growth rates. And then on the bottom right, low demand, relatively small markets, but really strong growth. And for those of you that are thinking, and maybe I'm open to a little bit more risk in making my investments overseas, that these could be really interesting places to look into. These are areas where an Airbnb is investing very heavily into growing both guest and host guest demand and new supply, and that could you could really be riding a wave of growth. Now let's look at these same sort of views, but for the U.S. I think this is super interesting in terms of where's demand moving within the U.S. There's overall growth of like 2.5%. That's kind of boring. But when I look and see how demand for guests is really shifting across the US, we start to find really interesting trends. So starting on the left-hand side, where's demand falling? And we do see demand falling in quite a few markets across the US, starting with areas on the top left, areas impacted either by regulation like New York or major disasters like Asheville and Maui. And then areas that have sort of pulled back in terms of a lot on regulation, but also on very demand-centric issues in the bottom left. And then the ones that get me excited on the right-hand side, so the opposite of New York, really being buoyed by the regulation that we're seeing in New York, strong demand in Jersey City, Newark. We've got Cape Coral, Fort Myers on the rebound from hurricanes last year, and then very strong growth in the Ozark Mountains, and then some of the small, medium to large cities, Cleveland, Indianapolis, Buffalo, Niagara Falls, all markets that have been on our best place to invest over the past 2 years. And then some of the really emerging markets across the U.S. We see Broken Bow, number one there, still relatively low demand, but the strongest growth in overall demand that we've seen in the U.S. in 2024 at 48%. Logan, Ohio has been on the list the past 2 years at 36% growth and demand. Deep Creek in Maryland, really some exciting markets if you're looking to find areas that are seeing outsized demand growth performance. With that, let's get into our best places to invest. Starting first with markets 25 through 11, we see a good mix of maybe larger to mid-sized cities. We've got Tampa and St. Pete showing up on the list, both with decent or supply growth, but seeing strong RevPAR growth and strong revenue potential. We've got Richmond, Virginia, decent growth as well. And I'd call out quite a few of these markets like Richmond, like Kansas City, do have significant regulation in those markets. In the report, we call out areas that are tougher to get permits, are tougher, and maybe you're only limited to primary plus one investment. So I would definitely highlight and dig into the potential regulation that you might see that might limit the opportunity in some of these markets. And then getting into our top 10. Really excited about some of these markets. Frankfort, Kentucky, sort of smack dab in the middle of the Bourbon Trail, saw 13% or 13% average growth yield. We saw over 60% supply growth in this past year. And even with that supply growth, we saw RevPAR growth positive, of listings still generating more money, $170 RevPAR, $303 ADR, very strong metrics in that market. And then our top 10, Crescent City, California at 5, Columbus, Georgia, which had been our number one market last year, saw a 20% increase in listings on a year-over-year basis, still driving average growth yield of 13%, and they still continue to grow RevPAR up 5.5%. Fairbanks, Alaska, number 2, had been our number one market 2 years ago. Still seeing very strong supply growth, 17%, still able to grow RevPAR up 6% over a year-over-year basis. And then Peoria, Illinois, number 1. Few hours outside of Chicago, average growth yield coming in with one of our strongest yields, over averaging 50%, and RevPAR growth of 7%, even in the face of 21% supply growth. So those are our best places to invest for 2025. The report is live. Something we did a bit different this year is we added breakdowns by average home value. And when we looked at these, we did it by yield. But the thought is a lot of you are going in with specific budgets that you can spend either on your down payment or and the type of home value you're looking for. And when we look at the markets that really came up with the highest gross yields, you typically see them at the lower budgets. And it's just the fact of the matter is, if you're searching for yields, you're typically going to find it when you're investing in lower overall list price and home values. So that can mean a report like ours, which is really ranking, putting a heavy weight on investability, really tends to be more lower home value type markets. So what we want to do is taking cuts at different ranges of home values, what might generate and what really comes to the top at different price points. So we highlighted those below. You get into some of the highest yielding markets at low home, $100,000 to $350,000 in areas like Broken Bow or San Juan, Puerto Rico, northern Michigan, Benton Harbor, Michigan City, Indiana, and even the Finger Lakes in New York. Then moving into some of the higher budget areas, we see Santa Rosa, Rosemary Beach coming in. So number 1, if you're looking at a budget over $550,000 to $1 million. And then even if you've got some real money to spend, areas showing up, Napa Valley, Portland, Maine, Sonoma, California. Really interesting. San Juan shows up at both the highest and the lowest, and then Kilauea, Hawaii. You compare the average yields though. So we're looking at average around a 7% if you've got a budget north of $1 million, versus if we go back and look at the lower end budgets, 100 to 350,000, averaging about a 19% yield in the stock market. So definitely a lower yield. But as we think about our invested capital and sort of putting it to work, that higher yield at a lower cost is going to take a significant more effort to sort of deploy, higher number of properties that you're managing, and a lot of work to potentially generate those yields. So with that, I do want to jump into a demo. So I'm going to stop sharing this screen, and we're going to dive into the app. While I get that ready, I do want to share with everyone, though, that we are doing a special promotion for everyone that's listening. If you use the code BPTI at checkout, you will get 10% off either a monthly or annual subscription. And if you're interested, and that's for AirDNA Pro, our self-serve sort of tool that most of you all are familiar with. And then I will show some sort of features available through AirDNA Advanced. And if you're interested in hearing more about AirDNA Advanced, you can book a call with our sales team. This QR code will take you to a form. And if you mention BPTI, they will give you 25% off. So with that, let's dive into the app. And as many of you know, we did relaunch our app in 2023. And the app has a ton of new features and functionality that really centers around finding the best places to invest. Because what we found and what we heard from our clients is AirDNA is great, but I can't actually find markets to invest with the AirDNA app. I essentially have to know the markets that I want to invest in and then navigate to each city individually. So what we wanted to do was find the sort of discovery process around short-term rental investment, make it easier. So when you go into a country, and this works for any country across the world. Now, with an AirDNA subscription, you don't just get access to a single city, you get access to the entire world to be able to dig into your investments. So we start here with this list of cities, and it shows all 317 markets across the US. Or you could be looking at submarkets, all 6,000 submarkets across the US. And immediately I can either start digging into and clicking into markets, and we do color code these based on our market score. Some of the best places to invest in dark, some of the weaker ones in the lighter colors, or I can start filtering markets. So you could, let's say I'm only interested in markets less than, let's say 10,000 listings. And I'm interested in coastal markets. And I really want to focus in markets with a high investability score. And our investability score is essentially calculated off of those growth yields. So I can hit apply. And then immediately I'm going to get a new list of markets. So I'm going to see the areas that meet that investment criteria. So low number of overall listings, high investability score, and I can see those listed. Now, if I was an advanced tier subscriber, I'm going to get a little bit extra across those markets, and I'm going to get exportable data. So I could click on the list here. I'm going to see all those same markets. I'm going to see listing counts, ADRs, some great sort of investability metrics around what percent are full-time, what percent are professional, what percent are Seeing growth in listings, things like that. Similarly, at the submarket level, I can see in those markets what are all the different submarkets that meet that criteria as well. And now I really want to get into analyzing a market that I'm interested in. So let's say I want to analyze Maine down east Acadia. I can then click into the market. I'm immediately going to see all the existing listings that are out there. But then I can also, and what I typically start to do now is dive into the submarkets. So, what are the different submarkets around my market? What are the key metrics for those different submarkets? And one of the big changes now with AirDNA is yes, I can start with overall market averages. Let's say Ellsworth, which was on our best places to invest list in 2024, has an average revenue potential of $55,000, but that's a market average. No one invests in a market average. I want to understand like what is an average earnings of a 4-bedroom property that is entire home and just houses, getting rid of apartments, unique type properties, and what is the average revenue potential for those type of properties? And here I see now it has increased in Ellsworth up to $95,000. And then maybe I want to sort these markets to the highest occupancies because I know this is a seasonal market. I want to see the ones that do the best in those driving occupancy sort of throughout the year. And now I can dig into a specific submarket. And what's fun now here is in addition to being able to analyze what are the top earning properties, which I think is one of the real and best things you can sort of dig into when you're analyzing a submarket. What are the existing properties out there that are generating the highest returns? Clicking into each of these properties where you can see, okay, I want to look at the schoolhouse. I want to see what is the seasonality of that property. So it looks like it's generating revenue from May through to October. What is the historical revenue in ADRs? You can sort of see these with our advanced tier, but also across all of our tiers, be able to see the amenities and then be able to click into the Airbnb listing and see the reviews and amenities of that property. So I can really get a sense of what are the things people are willing to pay for and what are the sort of attributes of properties that are generating outsized returns in this submarket. And then with AirDNA relaunching our site, we also launched for sale properties where you can see every home that's available for sale. And then where we've automatically run a rentalizer report against it, where you can see the projected revenue for that property. So I can see, and this property is currently for sale for $419,000. AirDNA projects that it would generate $62,000. And then most importantly, here are the comps that sort of sit behind that. So here are the comps that we've identified that are relevant for that one. And then you could click into each of these comps and evaluate whether or not you think that they are relevant and use those in your analysis. So we've really tried to bring all the data that you need to find the best places to invest based on your sort of investment criteria to forward to you. And then let's say like I'm sold on Maine down East Acadia coastal as a market, but I really want to start more high level with the for sale properties where I don't really want to narrow down to a submarket yet. So here what I could do is start looking at all for sale properties. I can go into my for sale filters and I can narrow down the type of property. So let's say I only want to look at ones that are in a house. I'm really only interested in properties that are for sale greater than $300,000. And then I want to hide properties that are not zoned currently that I can use as a short-term rental. And then maybe dig in a bit further if I'm really only interested in properties that are 4+ bedrooms. Um, yeah, and then apply that. I'm going to get a much more curated view now, 58 properties that are for sale. And then I can start analyzing those. I can sort maybe to highest or lowest price, and then see which ones sort of meet my investment criteria before I really have to go to Zillow. I don't have to sort of go back and forth in terms of analyzing markets against each other. I can really start with for sale, analyze that. Now, that's not to say you shouldn't sort of dig into your market, because once I start seeing and finding properties that I think could be decent investments, then I really want to start digging in to my market, understanding historical supply growth, understanding seasonality, understanding occupancy and ADR trends to make sure that this is a market that's really going to be a success long term. That's where we start with our market scores. So we've got an overall 83 score here in Maine Down East, high investability, high rental demand score, but relatively low revenue growth, seasonality, and regulation. So here can start seeing an overall supply trend. So this is a market that sees very high seasonality and where overall supply has been increasing. And where I really like to start my analysis is digging into supply. And I've got to maybe reset some of my filters. So how has supply changed over the last 3 years? With my pro subscription, I get access to the past 3 years of data. I can export that so I can see how supply growth has really changed across all the different sort of bedroom size categories. This lets me get a sense of what types of listings are growing, which types of listings are decreasing in my market. And then if I'm an advanced tier subscriber, I can go all the way back to 2018 and see sort of the longer term trend of that market. So see how supply has increased or decreased throughout COVID and then climbing out of it. So this market is one that we've seen actually pretty decent supply growth. So going from 3,000 listings during peak season to over 4,000 listings during peak season. The next real metric I like to analyze as I'm starting to dig into a market is looking at occupancy, getting a sense of the seasonality of the market, get a sense of if occupancy is increasing, occupancy is decreasing. And I can really see that. And yes, my occupancy has been coming down since 2022, but still generating very high performance and has actually increased a bit from 2023 to 2024. And that I get called out that over the past year, we've seen a 6% increase in occupancy. And then again, for advanced tier subscribers, I can actually go all the way back to 2018 and get a sense, maybe like one of the really, I think, powerful charts I can go in and pull of my current occupancy. How does that compare maybe to pre-COVID? So here it looks like we've vastly expanded the season for this market. We're in October. I was only generating 53% in 2019. Now occupancy is maintaining well into 70% out into October. And I can really start to learn how these markets are evolving. We also show forward data. So there's not going to be a lot to understand in a market like Maine over the winter, but I can start to see how the market is booking up for next summer, when people are booking for, what are the rates they're booking for, and what is the how far in advance they're really booking these days out into the future. I can see that as of now. And then I can also see that back through time. And this is another one of my uh, real favorite charts, is going down to the bottom where I can see, okay, during peak season, how far, how many bookings am I getting last minute versus how many bookings am I getting really 30 plus days in advance? Is this really helps me start to think through my pricing strategy? I need to have my rates really set probably a year in advance because people really do start booking well in advance of peak season. Um, and once I get closer, I can see, and yes, people are booking more last minute, but I bet, and these are the type of analysis that you can do. If we look at maybe 1 and 2 bedroom properties, um, we can see in 13% booking within a week, 8% booking within 2 weeks. Um, and then compare that to maybe larger homes, 5 plus bedrooms, seeing a lower percent, only 10% booking within a week and 4% booking within that 2 weeks ahead. So if I've got a larger property, oh man, look at that. 60% of nights booked for homes 5 plus bedrooms are booked more than 3 months in advance. So you can really understand how guest behavior sort of differs now that we've really implemented these filters to be dynamic across all metrics within the AirDNA app, which really unlocks deeper insights into your markets. So with that, Tom, gonna looks like we've had a ton of questions come in. Maybe we'll pause and answer some of those questions.
Yeah, absolutely. A lot of questions, a lot of interest in the report. Um, so there's been a few themes for some of the questions. So hopefully these will answer a few in one go. So one consistent question we've had come through is what kind of information do we have on regulation within the app, and how else can we help people with that kind of dealing with that regulation issue?
Yeah. And we don't have a ton of great information on regulation with the app. We did go through and call out um, uh, uh, within the top 25 best places to invest areas with significant regulation that would impact new investment in those markets. Um, we are working on how to better inform investors on regulation within our app. We have brought in for sale listings, sort of flags on areas that are zoned for or not zoned for short term rentals. But I would highly suggest starting with a Google search of, um, or even leveraging tools like ChatGPT or Claude or Gemini, and sort of types of prompts I'm using are what are regulations that would restrict new short-term rental investment in city above or county that I'm looking in, as many of the regulations are very county or city specific.
Absolutely, thank you. Couple of other questions on where do we source our for sale property data from? Yeah,
Yeah. We work with a company called ListHub, which aggregates for sale properties across really hundreds of different MLSs around the country. That data is updated daily. So as when with your AirDNA subscription, you can be going in and seeing updates every day on new properties that are coming for sale and what we're estimating each of those properties could earn.
perfect. Thank you. We've got a few questions on the methodology of the report. I don't know if you, as you're on the deck here, if you might be able to go back to the beginning just to give a quick overview of how we came up with the the methodology on this one for those who missed it at the beginning of the call.
Yeah. So starting with our main metric being investability. So looking at gross yield of all properties that are currently available for sale in that market. So looking at the annual revenue that we project each of those homes could earn as a percent of its listed price. And we did that at a market and submarket level, and then analyzed all the markets and scored those markets against each other. The other two metrics, demand growth. So what percent of available nights were booked, and how are we seeing those nights booked change? And then revenue growth, one of my favorite metrics to really dive into on the health of a market. So of listings that are available today, are we seeing those listings earn more or less than they did last year? So this can really give you insight on a health of a market as you analyze RevPAR over time.
Perfect. Thank you. And you mentioned earlier there was a decrease in urban supply. So a question here about what's caused that? Is it regulation primarily, or are there any other factors?
Yeah. And when we look across the US, um, uh, we see more and more markets today seeing an overall decrease in listings. So as I was showing the app, and that you can look really high level and very granular. So at a market and each of the submarkets, what is the year-over-year change in supply? This is and one of my biggest indicators of like how and what to start my analysis with. So when we go back to this time last year, there were only 7 markets that were seeing a year-over-year decline in listings. Today, that's 60 listings that are seeing a year or 60 cities, markets that are seeing a year-over-year decline in listings. So some of that is regulation. Some of that is just we see a real lack of new investment today. And then through natural churn of listings in that market, you see supply start to fall. So I'm sitting here in Atlanta. We had about a 4% decline in listings on a year-to-year basis. We saw that in Kansas City. We see that obviously in New York, but also in areas like Los Angeles, San Francisco, we're even Miami. We're seeing year-over-year declines in listings. And a big piece of that can be investability of it just doesn't make sense as a short-term rental investor today to go into that market. So we're seeing a pullback in supply growth in those areas. And then as existing investors or existing operators sort of churn out, that can pull overall supply down. That's not to say that these markets that are seeing supply growth are bad areas to look into. And many areas that can be quite the contrary, that as supply pulls back, that allows occupancy to increase, that gives existing operators greater pricing power, and that it could quickly move from a weak investment environment to a strong one as you start to see short-term rental revenues increase for those existing operators.
Perfect. Thank you, Jamie. We had a couple of questions around revenue potential. So obviously you showed in the app revenue potential for markets and for individual properties. Could you just explain a bit what that metric is and how we calculate it?
Yeah. So revenue potential is a estimate of what we think a property could earn as a full-time short-term rental. It is one of the main metrics when you run a rentalizer report. It is one of the main metrics when you look at our for sale properties. So I'm just going to run into the app, click on a property, and then maybe we'll look here at a property that's currently for sale and where we see the projected revenue. So what this does is it looks at each comp. So we've identified here 6 different comps where we're showing what these properties have earned. And then for an existing property, we show both what it earned, and then for properties that weren't available full time, we'll show what we think they would have earned if they were available for full time. So during those days that they might have been blocked, what they would have generated, and then we aggregate the monthly revenue potential for each of those comps, and then add it all together to get the expected earnings for that property. So here's the projected earnings for this property on what it would earn per month. And then we add up each of those monthly projected revenues to get the annual projected revenue potential for that property. And then one of the more recent changes we made, or additions we made based on client feedback, was they really wanted to know of that projected revenue, what percent comes from cleaning fees. So what we've done is we have gone into each of the comps, broken out the difference between sort of room revenue and how much of that projected revenue comes from cleaning fees. And then we drop in here. So you see $5,067. So we're saying of that total revenue potential, 5,000 of that was generated from cleaning fees. So if you're just going to be using that as a pass-through expense, that you can decrease that revenue potential by that amount and know exactly what the cleaning fee portion was of that projected revenue number. And that will show in both the for sale property section, or if you were really searching any property around the country. So searching a random address, I can click into the calculator and see, okay, this one had a projected revenue of $32,000. Of that, we say that 6,500 of that was generated by the cleaning fee.
Perfect. Thank you, Jamie. Excuse me. Just whilst you're in the app here, might be a good one as well. So we've had a few questions around how to kind of find information on specific property characteristics. So things like unique homes or places with hot tubs, that kind of thing. Maybe you could just show how to use the filters a bit.
Yeah. So we can either start high level the entire country, or what I like to do is really dig into specific markets. Maybe I'll go into the market where I recently made a short-term rental investment in North Georgia mountains. So I can go into STR listings. So this is going to show all 11,000 listings that have sold at least one night over the past 12 months. And I really use this as like a super comp finder. So if I'm making an investment and I really want to find a very specific set of properties that sort of align with the type of investment I want to do, this is where I start. Because then I can start diving into listing filters. So maybe you said you wanted unique type places. So these are like yurts, tree houses, really non-single family or multifamily type properties. Maybe I want to do entire place. So then I can apply that. So I can see there's 365 properties that meet that filter criteria. I can see where each of those properties is on the map. And then maybe in addition to that, I want to know which ones have a hot tub and find those. So now I've got unique type properties. So I've got this barn here. I've got some tree houses. I've got some yurts. And then I could click into them, find the Airbnb or Vrbo page. This is also a question we get pretty often of how do I get to the Airbnb or Vrbo links? So we do match all properties across Airbnb and Vrbo. And you can click to either the Vrbo page by clicking on the Vrbo button or the Airbnb page by clicking on the Airbnb button. And then I can also see all the amenities that are included with this property. So I see it's sort of indicated here that it has a hot tub. And also, without even leaving the AirDNA app, click through all the photos for that home and sort of see the amenities sort of firsthand that it has. Um, and that really gives me a more detailed view of potential comps. And then I'll just show for the advanced tier subscriber what you get. You can do similar filters to specific markets. So I could go into the North Georgia mountains, filter to just again, the unique properties with hot tubs. But then I could also get sort of the detailed data around each of those properties, the name, who's managing it, the historical performance for those properties, either current past 12 months or going back through time. Um, and then be able to export all that data. So it essentially gives you the ability to export really detailed data from our database.
Great, thank you, Jamie. So we've had a couple of questions around our data sources and also our accuracy. So I don't know if you want to tackle those two for one.
Yeah. So we are tracking all short-term rentals on Airbnb and Vrbo. Um, and then what we do to generate the sort of data is we are scraping calendars. So every single listing, we're looking at the calendar on a daily basis, which nights are available, which nights are unavailable. And then as we look at it every day, we're then tracking as that listing goes unavailable, what day it went unavailable on, and then modeling whether that was a booked night or just an owner going in and blocking that night. So if like it's a listing in Cape Cod and owner goes and blocks it during the winter, we want to make sure that that gets sort of tagged as a block and not as a sort of 6-month booking in the winter in the market and attributing revenue to it. So we spend a lot of time on that model. We track the accuracy of it daily. We recently made an acquisition of a property management system called Uplisting that you can now get through AirDNA, and leveraging that data to check our accuracy on a daily, weekly basis, and ensuring that our data is accurate really throughout the entire world. So there are some accuracy enhancements that we continue to do. One of the more recent ones was taking into account longer term stays and longer term discounts in our revenues. And what I can promise all the listeners is that the accuracy will continue to prove over time. I typically put sort of a 5 to 10% sort of buffer around the sort of estimates around a property. Because we are sort of estimating it, we are scraping the rates around the property, we're estimating demand. But overall, we see our accuracy continuing to improve over time.
Perfect. Excuse me. Sorry. Thanks, Jamie. Couple of questions here about, is there the ability to um, save properties that you're interested in, or kind of tracking, or same with markets? Is that something
Yeah.
we can demonstrate?
Yeah, one of my favorite new features in the app is the ability to generate save lists. Um, and this is something that I would sort of call in beta right now. We've got some big product releases that are going to be coming out at the end of Q1 and into Q2 around custom comp sets and customized rentalizer reports and saved rentalizer reports. But as a sort of preview around what you can do now is generating a saved list. So let's say in the North Georgia mountains, I'm looking to really create an estimate on what a property could do. That is so let's look in the Helen area. We've already looked at unique properties with hot tubs. Now I want to create a custom set of properties. So again, one of the new features too is as you zoom in with the map now, it is going to limit the properties that you're seeing to just that view. Now I want to go in and add each of these properties to a saved list. So I can click on the heart. I can create a new list. So I'm going to say North Georgia hot tub unique. Hit save. And then as I then save each property to that list, it's going to uh, add it in. Um, and I'm just going to do maybe one more. This fun one by the creek, highlighting glamping. So once I've created that saved list, now I can click on my name, look at all my saved lists, go to STR listings, and then I'm going to go find my lists. So North Georgia hot tub unique. I can see that I've got 4 listings with that. And now what's really fun is I'm going to see the aggregate performance of those 4 listings. So I can see they've earned on average $55,000 in revenue over the past 12 months at a $340 ADR and a 46% occupancy. I can see which months each of those properties were active, the average daily rates, and occupancy levels. So that is sort of a unique way to generate and track performance for a specific set of properties. Similarly, I can track markets. So if I go back to explore and let's say, and North Georgia is an area that I really want to keep up with, and maybe I want to add some more that I'm sort of watching. Let's say I want to keep an eye on Sioux Falls. I can add that to my watch markets. I can also do that with for sale properties as well. So let's say this $50 million home in Miami, I want to keep an eye on. I'm going to create a new list of can never buy, but want to watch. And then as I go into my different saved lists, I'll be able to keep an eye on those properties and sort of how it's sort of the projected earnings for that property sort of change over time. We do update these projected earnings every month. So you can see how that sort of evolves, or the list price. So it really gives me the ability to create a curated list of properties or markets and go in and quickly access them as I come back into the app.
Perfect. All right. Well, I think that probably brings us up to time. So thanks very much, Jamie. And thank you very much to everyone for joining today. As Jamie mentioned at the beginning of the call, we are offering a 10% discount with the code BPTI. Jamie, I don't know if you want to bring up that slide again. And if anyone does want to speak to our sales team, please do scan the QR code on the slide as well. Couple of other things. There's a lot of questions about we'll be sending out the recording. We will be sending out the recording, don't worry, so you can watch it back. And if we didn't answer any of your questions, I do apologize. There were a lot. We did our best, but we'll do our best to follow up with you all individually as well in the coming next few days. But again, thank you very much to everyone for joining today. And Jamie, thanks so much for taking us through it.
Yeah, and I'll just make one more plug. If you're interested in data, check out our podcast, the SDR Data Lab. You can find it on Apple, Spotify, or any of the other podcast providers. And then our blog, we do an update of US and European performance every month. Our team puts a lot of effort into keeping you updated on the latest trends. It's free. Check it out. Go to our blog, look for the US or European reviews. And there are great ways to get up to date on what's happening across US short-term rental performance, and appreciate everyone tuning in. Thank you.
All right. Thanks, everyone.